So with GameStop, there's more buyers than sellers, which caused this huge surge in pricing, which essentially made it to where the hedge fund managers would have lost substantially. Well, there's only a handful of stocks that were really speculative in that regard, based off of the comments made on Reddit. You know, the backstory to that was, hedge fund managers were looking to make a substantial amount of money based off shorting the stock. So what shorting a stock means is you bet against that stock going down. So you benefit from the detriment of a company or a detriment of the decline in price of stock. So these hedge fund managers were betting against GameStop to go down, and for right or wrong, that's really up to someone to decide. I can't say that's right or wrong, because that's a strategy that's utilized amongst many investors. But in the online community, that was picked up, that there was hedge fund managers looking to make money off of the downfall or detriment of a company. And so the Reddit community, exchanged words, and they all decided to start buying the stock. And whenever you buy a stock, that increases, if there's enough volume, if there's more buyers than sellers, then the price of the stock goes up. It's like real estate, right? The reason why real estate goes up is because there's a flood of people wanting to buy real estate. So with GameStop, there's more buyers than sellers, which caused this huge surge in pricing, which essentially made it to where the hedge fund managers would have lost substantially. Robinhood stepped in, and I think some other custodians stepped in and felt that it was wrong for price manipulation to happen, right? Maybe they felt that this was insider trading in a way. They call it outsider trading because it's a bunch of people from the outside collaborating and having the same idea and purchasing and flooding this stock with billions of dollars, causing it to triple in value. I think it did much more than that. I think it started at $17 a share and it went all the way almost to $400 a share. So that's kind of the story. Robinhood received a lot of heat for that, right? They're essentially protecting the billionaires from losing all the money. They essentially put a stop on buys, so no more people could buy as of Wednesday, which caused the price to not go up. If nobody can buy into the stock, that makes the stock price unable to increase in value. Essentially is what the hedge fund managers want. They don't want an increase in price. If the stock of the price goes up, then the hedge fund managers lose. So hedge fund managers just needed that price to go down. I don't know how much Robinhood's true involvement in that stock they held, but I've heard the other side of the story as well, that it was more for the safety of the overall public to limit some of that volatility. They limited buys, and so when you limit buys, that kind of limits the volatility. The stock can only do one thing. It could either go sideways or it can go down. Again, I don't know how much that protects the shareholders, because if the price is going down, there's a lot of people losing money. From what I hear and what I've read online is, if they're able to stop people from purchasing the stock, you're limiting the price to go up, and essentially that can limit volatility.